Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis. If you're new, welcome, and if you're returning, welcome back. If you find the analysis useful every week, please share, like, and subscribe, and even comment, just letting me know how you're getting on with the levels that I give every week, and if I can give any advice, not financial of course, but maybe give you a bit of an insight into maybe the direction you should be potentially looking to trade, then you can email me, or what you can do is start to learn for yourself and go onto the free fundamental analysis course. The link is in the description box below, right? Free fundamental sentiment analysis course, and go over why you should be considering fundamentals and sentiment, risk sentiment in your Forex trading if you're just trading technicals, to really kind of up your game. And if you want to get a helping hand, I have a fundamental analysis spreadsheet where I put together my opinion on the fundamental strength of currencies. So what you do with this sheet is pretty much just look to trade. If I'm bullish, and again, do your own research, please. But if you agree with me on my bullishness for the US dollar and maybe my bearishness on the Japanese yen, then you should be looking at buying the dollar yen currency pair pretty much at all times when it comes to things like pullbacks, and not always looking to just trade looking to trade supply and demand zones. What we're looking for with supply and demand is value, and you really determine value by fundamentals, macroeconomic data, as well as central bank monetary policy, right? So this makes it easier for you. Choose a few pairs, 2 or 3 pairs that you're maybe bullish on, and choose a couple of pairs that you're bearish on, and those are the currency pairs that you should really be looking at trading, right? Strength against weakness, and that's what causes trends. Technicals aren't the reason why prices move. It's fundamental and sentiment, as well as the zero sum game, which I might get into in another video. But anyway, getting back to the technicals, and we will always start off, as we do every week, on the US dollar index, right? So the US dollar index, we did manage to make a bit of a bullish move back up into this supply zone here. So what we're doing is we're going to draw a demand zone, and also this week, just to let you know that I'm going to be releasing one of the videos from the supply and demand zone Forex course, which shows you exactly how I draw these supply and demand zones. All right, I thought I'd give it to you for free. It's about half an hour long, and the course is about 7-8 hours long, so it's just a little gift for me to use, so you can actually start plotting the zones yourself, and so you can basically just plot along with me, and kind of match your zones with my zones too. All right, so I'll be releasing that maybe Tuesday or Wednesday for you guys, just to help out. So we've created a higher high, as we've created lower highs here, some demand coming into the market, right? So what we're looking at this week, and the dollar index is just a measure of dollar strength against major currencies like the pound, the yen, and the euro. If you are bullish on the dollar, then you're looking at buying when prices come down into here, but we're not going to be buying the Dow Jones Dollar Index. We're going to be buying on any of the Forex currency pairs, and we use the Dow Jones Dollar Index as confluence with other currency pairs. So if prices do come down into here, then you want to be buying, obviously, if that's your fundamental analysis and it agrees with mine, then you want to be looking for buy setups at demand zones on currencies like the dollar, yen, dollar, Swiss, dollar franc, etc. Right? If you're looking to sell the dollar, maybe there's some short-term, negative sentiment. Then now we're would probably be, the time to look to get short on, dollar currency pairs if you see, a setup. So those are pretty much the two options. We're in a bit of, I say no man's land, but I would probably wait for maybe price to come slightly higher, but now's all right to, potentially look for short trades. But if you're looking for long trades, definitely look to potentially get long if prices do come down into this demand zone. So with that being said, moving on to the dollar yen. And the dollar yen, we came down into this demand zone last week. All right, and you can see where prices had reacted. So if you did manage to get in on any of the lower time frame, pairs, then well done to you. Right, here was where prices did react. And I think last week I did go over the supply and demand technical analysis basics, which should aid you when making trading decisions. And if you're unfamiliar with the supply and demand technical analysis basics and determining supply and demand order equations, so willing supply, willing demand, and forced supply, forced demand at an area, and why there should be more demand in this area from a technical analysis perspective, not necessarily fundamentals, and really the psychology around the order flow equation, then I advise you to really check out the channel. This video here, free Forex trading supply and demand order flow equation, where I go over really how to trade the supply and demand order flow equation. So horizontal support and resistance, daily, diagonal and dynamic, right? And I went over this in last week's video, but I'll do it again quickly, where you have the trend line, so which is a diagonal support and resistance. You also have horizontal support and resistance in this area, right? And then you've also got moving average, right? So go back to last week's video where I kind of break it down, and I was saying that this should have more demand than supply in this area, and as you can see, prices did make their way higher, right, and react around here. So this is basically what you apply to if you want to be a buyer or if you want to be a seller of the yen and a buyer of the dollar, or vice versa. So if you're trying to look to get short, then you'd be looking for a supply zone and then technical analysis basics. Here, do you need all of them? No, but we definitely need an area of value, which is supply and demand, and then we'd need maybe one or two of these. Three of these is like the A1 setup kind of thing, where you definitely want to be looking to buy or sell depending on your fundamental analysis. So let me just get rid of those. You can see obviously the reaction. Now we're not in control of obviously how far this reaction is going to go. Again, that comes down to fundamentals and sentiment. The Japanese yen is does well and a beneficiary of risk sentiment. So when we do have uncertainty in the market, the Japanese yen is kind of used as a safe haven, right? So just because I might be bullish on the dollar doesn't mean that every demand zone is going to work if there is a risk off environment. And again, if you don't understand what I'm talking about, definitely click on the free fundamental analysis course in the description box below, and you can learn all about that and how to really apply that analysis to your trading. So if you did miss out on this last week, then what you're looking for probably is a pullback, right, before looking to get long, right? The next area you're probably looking to get long that I can kind of see for now, right, is going to be probably going to be down here if this level doesn't work out. So you've got your your area of support and resistance right there within that demand zone, and then you've got another one where you got resistance, bit of support here, support, right? So you just drag that along, and it'd be around the 111 round number if prices do come down here, right? If this level fails, and this level here is where you're looking to get potentially long. And again, if you're looking to get short, it's really way up here. So moving on to the dollar Swiss franc. The dollar Swiss franc I've been looking to get in long for the past couple of weeks. Made some money on the way up here, took profit. I was waiting for a pullback, but it didn't really pull back. But now we've created a higher high, so this allows me the opportunity, and this is having patience as a trader. Just because you see a shorting opportunity within a technical level of supply and demand doesn't mean you really should be taking it, right? And again, this is just me. I can't advise what other traders should be doing, but it's less likely if you're looking to buy into strength. And everyone says that they're trend traders, following the trend, and then they end up, doing counter trend moves that may or may not work out. Now, depending on if you got in on this, this pin bar or wherever your risk reward was, you may have made some money on the, to the downside, but it's really not the best, trade to take. Just be patient and wait for your trade to set up, even if it does take, a week or two or potentially 3 on a certain, currency pair. So anyway, we've, made a high, a higher low, right? And my definition of a higher high is where you have a, bullish candle, whether it's a close or a wick above the previous swing. Right here, it's made a higher high. So now I'm waiting for prices to potentially pull back into this demand zone before looking to get long, right? And then again, apply the supply and demand equation, right, order flow equation to this demand zone. So as an example, what we have is we have support, right? So support, what traders would call support, resistance. Prices have reacted here. So now my first area to try and look to get long is going to be within, this area here. Probably maybe draw it up. If prices do come down to this 0.99 level, maybe a bit lower, right? And I'll be looking for maybe lower time frame structures. So this might be another one as well. You can see here where you've got support, resistance. So prices do come down here. Again, it just depends on sentiment and what's happening fundamentally. This would be maybe the first area. If I get the price action, this may be the second area if I get the price action, right? So if this fails, I'm not bothered, because I'll go for 2 to 1s, 3 to 1s, etc. And as long as I've got potential to the upside, then I'll be looking at buying the dollar over the Swiss franc. And again, this is just not financial advice. And if we have a risk on environment, as the Swiss franc does well in a risk off environment. So that is really the tracer up to the long side. To the short side, you'd be looking, and let me just get rid of some of these arrows. So to the short side is really, now is really the opportunity to try and look to get short, right? And look to get short around here, right? Again, apply horizontal, probably going to be somewhere within this zone here where you've got a bit of resistance, support, resistance. So between these two supply and demand zones, if you do see anything, you could potentially look to get short and take advantage of some some dollar weakness. Prices, because even though I'm bullish, prices could come all the way back down here and go through these zones. Who knows? We're just basically trying to manage our risk and go for more than we risk. So dollar CAD, and this week we did get a breakthrough of this supply zone, and with supply zones and demand zones, the more times the level is touched, the weaker it becomes. So you had this move here, you had once, twice, and then this is the third time prices did break through. This was aided by some CAD news. Inflation was way below expectations, which pretty much traders would then assume that the Bank of Canada are gonna probably delay raising interest rates because they don't necessarily have to, because inflation is within their 2% target. So on Friday, you saw the release of that news, and now, you know, prices have reacted to that and have really broken through, and you'll see that on all pretty much other CAD pairs. But there is a Bank of Canada announcement this week, I think it's on Wednesday if I'm correct, where if they are still hawkish, and their language is hawkish on the raising rates on the Canadian dollar, then this could potentially reverse. But what I would probably do is wait for price to really come up to, you know, this area before looking to, if I was looking to get short and on the dollar, then that would be the area. If I'm looking to buy now, then I'm taking this off, and I'm gonna raise that up to around here. So that would be the first demand zone, you know, that I'm looking for to buy dollar versus the CAD. So anywhere around here, and again apply horizontal, diagonal and dynamic support and resistance to these levels, just to see if there's any confluence within that area of willing or forced supply and demand, right? Moving on to the New Zealand dollar, US dollar, and this week we've created some higher highs, higher lows. The New Zealand dollar has, you know, kind of gained in strength, and that was, I think, because of I think, was it GDP? Well, there was some positive news last week anyway, or the week before, I think late last week or early last week. So yeah, the New Zealand dollar is looking to potentially strengthen. I'm still bearish this currency pair, and if you are looking to get long, then you'd be looking to buy in that demand zone. One of these zones would be where to look for potential shorting opportunities. Again, we're looking at horizontal support and resistance. You can see there's a definite area around here, right, where you've got support, bit of resistance to the underside. If you want to drag this down a bit more, then you can see where you've got resistance here. So it's around this 66 0.662 level, right? So that'd be the first area to look to potentially get short if you get the, you know, your price action. If not, then, you know, further up, etc., etc. I'd probably say in this area looks like a decent area. All right, so wherever, you know, if prices do come up here, then this 6-7 round number is where I'll be looking at getting short again. So moving on to the pound dollar, and the pound dollar, we did come down into this demand zone, and then obviously react on Friday. And last week I did say that I was in this trade. I did take profit from this this candle here just after I completed the video. But if any of you did stay in, right, then you're looking at a good risk reward wise, you know, depending on obviously where you put your stop. It's probably about 47-48 pips, and then, you know, that's 200 pips, you know, to the lower end of this this area. But I'd made about 2.5 to 1 on this trade anyway, which I was fine with. And I was just basically explaining, I think in last week's video, that I'm not really looking to hold the pound, as it's a bit unpredictable, especially with Brexit looming. You know, prices should, with the uncertainty with Brexit, prices should want to, go lower, especially with the certainty of the dollar being, you know, the king at the moment. But I'm probably going to be, you know, just taking profits in and out, 2 to 1s, 3 to 1s, you know, and taking advantage of the negative sentiment. But if you do want to hold, then be my guest. So if you're now looking to get long, I'm going to keep this demand zone on here, and you'd be looking for a long trade at the moment. If you're looking for a short trade anywhere, then as we've made lower lows there, that would be the area to look for, you know, your first short. I would probably want prices to come past that zone there, maybe a bit higher into this 1.33 level where you've got a fresher area of supply. But again, if prices do come down, we'll come up into here, and then we see, you know, or we hear about some negative news regarding the pound or positive regarding the dollar, then this is an area. But technically, again, we've touched this level once, twice. So the third time isn't necessarily the best. If you do want to get in short, then just reduce your size to maybe half or a quarter and maybe take, you know, the trade. Whereas you always want to look for, you know, maybe the first or second touch of a level. Third touches, you know, tend not to work as well. Going back to buying, if this level doesn't work out, then you'll be looking at this area here to look to get long again. This would be the first touch. So the second touch, right, of that demand zone would be fine. The pound yen, right, pound yen, went through that demand zone. We've created a supply zone here, right, and a few, matter of fact, around here. Let me just move this forward. In fact, object tree. No, move that up. There we go. So it did bounce off of this last week, this demand zone, and then we've kind of broken through and come back up. In a situation like this, don't really like to do it, but I'm gonna just put the demand zone down here because there is some demand, even though it's closed below. I'm not necessarily, you know, I don't subscribe to the theory that because you get a close, a daily close below a level, that, you know, the level is gone. I would say, and it depends on how it reacts as well. So, you know, prices have reacted with some demand, so there is demand there. So I'm going to draw this level, you know, to the long side, to the long side. But you know, I'll keep this level here and just drag it down slightly. But if we do come down and touch this demand zone, then I'll be deleting this demand zone here. So again, if you want to be a buyer of the pound versus the Japanese yen, then what you'd be looking for is bit of a pullback before looking to get long on the lower time frame. If you're looking to get short, then you'd be looking at, you know, your first area is going to be probably around here where you've had, you know, resistance, a bit of support and resistance, support. So, you know, going into, you know, Sunday, Monday open, then this is going to be a first level at the moment to try and look to get short. But again, it depends on whether you think the Japanese yen is going to strengthen or the pound is going to weaken. So zooming out again, we just look for areas within this supply zone to look to get short. Potentially, if you see something like this where you've literally got, you know, lots of I suppose choppy price movement, then you'd be looking at maybe an intraday levels to see if you can see anything that's clearer, right? So shorts probably anywhere from now, looking to get short, and long positions are obviously from these demand zones. Pound Swiss, we did react again off of this supply zone right here, moved up, and again from last week, I did say that, you know, if prices did come up into here, then look for a shorting opportunity. But again, if you believe that the Swiss franc is going to strengthen against the pound, that was really the trade to take. And some long positions, again, where it pretty looks like we're going to be entering into some sort of, you know, really tight range between the 1.295 level and the 1.31 level. So if you do want to get long, right, now is probably the opportunity to potentially get long. If that level fails, then you'll be looking at that area there. If you're looking to get short, again, you'd be looking for price to really come back up to here before looking to get short. Second level would be around here. Euro dollar, and we have prices. This one was actually got stopped out and re-entered and managed to get a nice little trade off of this one as well. So last week, again, if you watched the video, I said I was short on here and this currency pair, all right, and didn't get you know, my risk reward that I wanted. I think I was up maybe a 1.5 to 1. We ended up coming up and then spiking above, right, the swing. Now I recognize this as pretty much a basic stop hunt, you know, type candle, where you know, the market zero sum game. There was a lot of traders trading double tops, right, in this area. Well, I didn't trade double tops, but I got in here, so there would have been a lot of potentially tight stops around here. And if the market needs to potentially go further down, then it needs to take out some stops before looking to go further down. And if you don't really understand what I'm talking about, I did do a video, I think, about bull and bear traps, explaining how the banks actually trade, right, and why stop hunts occur. But anyway, did see this. I did get stopped out, and then I saw a nice entry to try and look to get short again. So I just re-entered, right, and then managed to get my trade, you know, to the downside. Nice 2-to-1 trade. So as long as you go for more than you risk, you don't have to be right all the time. 2-to-1 trading as a minimum, you only have to be right 33% of the time, or maybe 34-35% if you include spread, you know, just to break even, not to lose money over the long term, right? So if you think you can be right more than 35%, right, at 2-to-1, then you should be fine, right? You should be okay. So it's okay to re-enter while you're, you know, if you get stopped out. But again, if it's within your plan, and again, fundamentals actually help you with this, right, and help you to have the confidence. Because if you don't know that the dollar is, you know, supposed to be stronger than the euro, right, for fundamental reasons, then you know, you're pretty much lost when it comes to just looking at technical analysis and your emotional and the way that you would trade, right? But for me, I had that conviction in the dollar over the euro, especially with the euro going through its you know, its Italy budget crisis, and again Brexit as well. A lot of uncertainty. You know, it's okay to try once or twice, or even 3 times, but maybe just lower your risk, etc., right? There's ways that you can manage this trade, right? But don't worry if you get stopped out. You know, if you get stop hunted, and it's just about recognizing stop hunts, which is not something I necessarily haven't got necessarily a course on it, but through my mentoring, and if you do sign up to the course, I will be showing you how to, you know, trade potential stop hunts like this one, and really have the confidence to enter as well. So if you're looking to be a buyer now, right, then you did have a reaction right here. I would probably look for a pullback if I was looking to get long on the euro before looking to, you know, prices, because if you look at Friday evening, prices did shoot up. I'm not too sure why, but if I was looking to potentially get long, then I would want a better risk reward, because if you really had to enter this, then you'd be looking at, you know, would be potentially your risk, right? And if you're looking to trade it up to the highs, then you've barely got a 1-to-1. What you want is more of a risk reward, where you're looking at, you know, somewhere down here, and even if you don't trade it up to the absolute highs, you've still got a 2.5, 3-to-1, you know, trade type scenario. So looking at you know, this area, I'd wait for a pullback before looking to get long. If you're looking to get short, then again, this would be the area to try and look to get short. And if that level doesn't work out, then you're looking at anywhere up here. Again, try and look to get long around here. And don't forget to, again, apply the supply and demand equation when it comes to areas of supply and demand. Euro yen, we did react for this last week, and then prices broke down and have continued higher. So you can delete that. Now again, if you're looking to get long on the euro, then wait for a pullback, unless you trade obviously daily time frame charts, and this is an entry that you would take. But if I was trading this to the long side, I'd be waiting for a pullback. If you're looking for a shorting opportunity, then this is going to be really your first shorting opportunities right here, as you made lower highs and lower lows. So anywhere within here, and you'd probably look at a level or an area like this, where you have, you know, support, resistance, support, resistance, bit of support. So around this 1295 to 130 level is where there's obviously, you know, activity. And again, apply your diagonal and dynamic support and resistance to this area if you do get any more willing or forced supply and demand within this area. And obviously fundamentals come first, so in sentiment. So if you think that the euro is going to weaken or the strength is yen is going to strengthen, then this is where you'll be looking to potentially get short around, you know, this area right here. Let me add a bit more demand zones. I'll add the demand zone from here to here as well. Right, so those are your options. If this level doesn't hold, then you'll be waiting for prices to come down here until for a buy trade. Euro pound, and the euro pound has made, it did react off of this demand zone right here, you can see, and then prices have reacted, pulled back, you know, created another demand zone here. So if you are looking to get long, waiting for a pullback into that area from a short perspective, nothing really. You'd have to wait for price to come down, also come up into this area here before looking to get long this pair. I'm personally just staying away from very, very volatile and unpredictable, with, again, Brexit going on. I'm really not going to be staying away from this currency pair. But if you feel like you want to, you know, you have an edge in this currency pair, then again, be my guest to try and look to get long or short. Euro Swiss did react to this demand zone here, and it's going to be a first area to get short. If you're looking to get long, you're probably waiting for some sort of pullback, probably a deeper pullback into this area here. Again, this is where you'd be probably looking at some support resistance. You've also got a bit of a level right here, it looks like, within that area. So yeah, maybe a deeper pullback into this 1.13, just below this 1.14 level, right? If you're looking to get long, and then your secondary attempt would be down here. And again, looking to get short, then you're waiting for prices to really come up here before looking to attempt a short on this currency pair. Euro Aussie, again, had a decent week with this, managed to get short from last week. And it was a 6-hour candle where this was an outside candle here. Right, this was the entry candle, and again, I said that from last week and last week's analysis. A nice 2-to-1 trade on this currency pair, managed to get out pretty much around here and down into this demand zone. So demand zones and supply zones can also be, you know, targets, right? I like to target potentially fair value or the bottom of ranges, right? As long as I've got enough to the downside. So what I mean by this is, let me just give you an example. So at the time, if we go back, right, this is a really good feature, by the way, on trading view. If you don't use it, I think you should for your, you know, for if you're looking at back testing. It's called bar replay. So that was the original trade, right? Supply. Decided to take this trade here, right? So what you want to try and look for is at least space to the downside, right, before you hit any kind of trouble area. And the trouble area would be, you know, any kind of demand, right, or in vice versa would be supply. So I knew that there was going to be a potential range between, you know, this high, and if I zoom out, we'd be ranging from this high to this low. So value range tool, right? I knew this was going to be my range. This was going to be an expensive area, and this is proven to be an expensive area because prices couldn't go higher than this, and this is going to be a cheap area. As you can see, prices had reacted and buyers had really, you know, sent the prices higher. So I knew that this was my potential range. So how much potential downside do I have if I think that this is a bargain area for the Australian dollar? I have at least, right, top end of this, but if I was looking to take the absolute low, it would be, you know, 4-1, right, depending again on where my stop was, so maybe about 3.5 potentially, right? But you don't have to necessarily take profit at, you know, the absolute low, right? Because you don't want to be left holding the bag, right? And what I mean by that is there's going to be other traders looking to take profit around these areas, and especially within this area of support and resistance where you had, you know, you got a bit of support, right? Didn't really, you know, price didn't really react here, but trouble areas are, and profit targets are where you want to really try and take profit, because there'll be traders, again, a lot of forced and willing demand within this area, right? And again, if you don't know what I'm talking about with forced and willing supply or demand, then please watch the course. But this was the area that I was looking at taking profit actually just before then. I think I took it at 2.5, 2.4 to 1 around here. So the point in this is basically just to show you that you want to look for downside potential, right? And downside potential and looking to take profit at trouble areas. So if you're looking to, like I said, take profit, then look for ranges and try to take them either around fair value or just below fair value. And as long as you've got more than you risk, then it's fine, right? I did think that there was going to be obviously a ranging price action here, so I was just looking to, you know, take profits and get in and out. And luckily, this week has been a decent week, right? So if you're looking to be a buyer, right, then wait for prices. I'm waiting for prices to come down into this zone here, or again back down into this horizontal support level before looking to get long. If you're looking to get short, I think this level has been touched too many times for my liking. I wouldn't be necessarily entering into this, and if I do, and you know, if there's any negative sentiment around the euro, then I'll probably be entering at a quarter or half position, you know, and maybe trying my luck. But this isn't an area that I'm looking at technically looking to get short. But from a technical perspective, this demand zone looks decent, right? But again, if you think that the euro is going to get stronger than the Australian dollar, then be my guest. Aussie dollar, right? Aussie US dollar. We have reacted off of this long-term demand zone, and we are creating higher highs, higher lows. So I'm going to draw demand zone right here. Demand. In fact, I'm going to bring this up here. As we've created higher highs, higher lows. Then, yeah, so what we've got is that, and we've got that. And then we've come down into this area here. And now on a micro level, on a lower time frame, you can see the reaction. So, sorry, let me just move this out of the way, move this down here. So, in fact, you know what I'm going to do? I'm going to, no, actually, I'll keep it there. I'll keep it there. So if you're looking to get long at the moment, then now is the opportunity potentially to look to get long. Or if you're probably looking at a deeper pullback down into the lower end of this demand zone. And if you're looking to get short, then this is going to be the first area to look to get short. And then obviously your second area. And if you look here, you're going to have support, resistance, bit of support and resistance within this area here. If you count that as being support, prices move higher, resistance to the underside. So this is a decent area to potentially look to get short if you're looking to buy the US dollar over the Australian dollar. And finally, the Australian dollar, Japanese yen. we have reacted off of this supply zone several times. If we do have a risk on environment, yeah, then you can expect this level probably to kind of break to the upside. If you're looking to get long, now is a decent opportunity, but just remember that you're probably buying into that supply zone. So what you'd probably want to look for is a deeper pullback anywhere down here, preferably down into this lower end demand zone. This is the most bargain area, you know, the cheapest area that you can get exchange rates at a 79 round number. If prices do come down here and we have risk on, then, you know, I'm looking to probably be a buyer. If you're looking to be a seller right now, isn't necessarily the best, even though there is a supply zone. And again, it's simply because we've touched it a few times. If we go down into, you know, a lower time frame, we've touched it, you know, once, twice, it's the third time. So again, depending on risk sentiment, this could obviously react, but if it doesn't, the risk is on again. Stock market is bullish, etc., right? Then I don't really expect this level to hold. And then what you'd be looking for on the daily time frame chart is this level becoming a level of demand, right? That purple area becoming an area of demand. That supply level gets taken out, and then you'd be looking for a potential pullback into this demand zone before looking to get long. Again, if you're looking to get short, then this would be the area that you'd be looking to get short in. So I know it's a bit messy, but hopefully you've understood what I was saying. And that concludes this week's supply and demand analysis. If you have any questions, you know, don't hesitate to email me at info@trading180.com, and I'll get back to you as soon as possible. Again, don't forget to like, subscribe, and share. Hope you learned something from this content as well. And don't forget to watch the free fundamental analysis course if you are struggling with just technicals alone, right? Technicals aren't the be all and end all. If you do want to add an extra edge to your trading, then fundamentals is the way to go. So hope you have a great trading week, and I will speak to you soon. So if you'd like to receive the best supply and demand Forex levels absolutely free, click on the link in the description box below, enter your email address, and we'll send you the levels that we have just analyzed in this video. You'll get all of the major Forex currency pairs, and you'll get regular updates and never miss a Forex trading opportunity.